India's OG poster child of the startup world, BYJU'S, has seen a rapid fall from grace in the last couple of months. And the turn of events has had a cascading effect on the entire edtech space. In the latest development at BYJU'S, the edtech major has dragged its lender Redwood to the New York Supreme Court to challenge the acceleration of the $1.2 billion term loan B and to disqualify Redwood for its predatory practice. Meanwhile, reports suggest the $22 billion startup is looking to sack another 1,000 employees. The turn of fortunes at BYJU'S and the road ahead for the startup ecosystem, especially edtech, is in question today, and that's what we're discussing with Harminder Sahni, founder and MD of Wazir Advisors, and Ganesh, serial entrepreneur. He's also, of course, the promoter of BigBasket, Portea, Bluestone, and Homelane. Welcome to both of you, and thank you so much for speaking with us at ET Now as we try and figure what's happening with BYJU'S. So it seems to be a trifecta of issues. You have a debt trap of sorts building, reports of employees being laid off, and on the other side, the entire space of edtech kind of shrinking. Harminder Sahni, how would you look at this, and can BYJU'S really recover? What's the bigger lesson here?
So, Tamanna, I would never say never, because I think you have to give the credit that they built this large company, and one of the, I would say, the credit-worthy moves which they made was to acquire Akash, which was one of the largest players in the space. So I think if this team has built this so far and they managed to raise all this funding, so whatever may have happened in terms of whether it's the mistakes in terms of overexpansion, financials, or maybe just believing that what happened during COVID, the world is going to change forever and never going to come back to normal or some balance will be struck. So whatever the assumptions, so I think I would say, yes, there is a chance that they will come out of it and recover, because I think it's, the hypothesis remains the same. On the education side of it, yeah, education space needed some kind of a disruption, and BYJU'S brought in that, and that fact remains. So whether BYJU'S itself can recover and come back and do what they have set out to do in a far more balanced way, or whether they will disappear, time will tell. But yes, they can recover. Opportunity is still there for them to recover.
So the opportunity is still there, says Harminder. Now, the question is that the kind of valuations that BYJU'S, and it's become sort of a flag bearer for the entire edtech space, the kind of valuations that they commanded has clearly taken a reality check. You've had downgrading of valuations by some of their key investors recently. Ganesh, I want to come to you on this point. What do you think has gone wrong for the BYJU'S story specifically?
Yeah, so I think there are multiple issues here, slightly more nuanced than what it appears. Clearly, the valuation that BYJU'S, edtech companies, and even listed stock got 2 years back, and the corrections that have happened shows that that was euphoric, unrealistic, inflated valuation. So that is in line with what has happened with other startup and in public markets. So not surprising. So, and that's not, similarly, layoffs that's happening, people had overhired, people had overestimated the impact of pandemic and what will return to normal be. They have gone into new verticals, they have expanded, which correction is taking place. So layoffs is happening across the board. So that also, I would not say is par for the course, but that's not surprising, that's not that thing. The biggest challenge I think BYJU'S faces is, as a company that is making losses, taking on debt and falling into a serious debt trap is a major concern. Traditionally, if you look at companies that are leveraged, I mean, you have seen companies which have taken debts, and we have seen in the Indian markets, including the Future Group, which has struggled with debt, is they had positive cash flows, they were profit making. There was a semblance of realism that out of the cash flows and profits, they can service the debt. Unfortunately, startups don't make profit. When startups start taking debt, then it is a serious issue. How are you ever going to service the interest, and how are you going to repay the principal? I think that is the biggest serious issue in this entire saga. I would I would not bother about smaller distractions or issues. They are still issues, but very minor. The good part that has happened to BYJU'S is they did use their inflated stock and this to buy Akash. Akash is a crown jewel. It generates profit. It generates cash flows. As per the media reports, they are looking to IPO. It will give them some relief on it. But I think debt by a loss-making startup raising debt and trying to service the debt is the single biggest issue for it. Other than that, there have been aggressive acquisition. If you look at it, look at the business model, edtech, healthcare and education are the least affected yet by technology, therefore ripe for disruption and a huge sector to spend on. But the business model of bundling software with tablets and selling hardware under the guise of educational product has not worked out well. The White Hat Junior, because of the cost of acquisition of students from the US, has not worked out well. Akash is very good. So I think they do have a very good realistic chance on the back of Akash to be able to come out of it, but the debt needs to be handled. That's my summary of it. I wouldn't bother too much about writing down a valuation by some investors. That's a technical paper valuation correction. No transaction has taken place in that valuation. Nobody should worry about it. And
okay.
For the, but,
okay, so I get your point that the valuation is, maybe part of a bigger picture. Then, of course, there was a concern about the last financial results. It came after a delay of several months, several reminders, 18 times increase in losses. All of that maybe has led to the valuation game. But, the larger picture which we need to speak about, let me come back to Harminder Sahni on this, is the pattern of growth and the focus on customer acquisition as the hub for that growth. I mean, this particular company ran into a lot of trouble for that as well. There was a notice from the NCPCR. There was a lot of negative publicity about how customers were being acquired, and then they came out with a whole new pattern earlier this year, which was that we will get consent 3 times if someone really wants to sign up. And that would be a good change. But then that comes back to the same question of whether the scale is really sustainable. Akash may be the crown jewel. What about everything else?
Well, I think the scale is, you have to define the scale. And I think any business which is starting out, even reaching 100 million revenue is a very large scale, right? Why we have to talk about hundreds of millions and billions of dollars? Market is there, it will happen, right? But yes, there was hyper growth, acquisitions were made, aggressive customer acquisition was happening. But if you for a moment change it to saying this discussion is about, let's say, Flipkart at the time, it will sound the same, right? Because that's how the business who are in hyper growth manner and being fueled by the venture capital, that's how they will behave and that's how they did it. One of the things other than Akash also, I certainly believe that when a debt-ridden company, they have to come out of it. The best thing is, do they have any assets to sell, right? How they can service that. So if they have, right, and if they can figure out some of those things, it will work out well for them. But definition of hyper growth itself is going to change dramatically in India, I think, in the startup world, that how people are, there are various things, but I think not to undermine the latest exit of Sequoia from India, I think this is, a lot of people will look back after 6 months, year or two and say that what a dramatic event that was for the startup world. And I think a lot of definitions are going to change. I would say forget the definition, but I think a lot of numbers, they will be losing out a couple of zeros at the end of what we were saying. So we were saying 1 billion, we'll be talking 100 million. We were talking 5 billion, we will be talking maybe 500 million. That's the kind of dramatic change in numbers is going to come. And if you were talking this is going to happen in 12 months, then we will be talking maybe it's going to happen in 5 years. But that's all right, right? It's a redefinition of the ecosystem, redefinition of what scale means, a redefinition of what the funding will mean. All of that is going to happen. So I think that's from that point of view, BYJU'S is not alone in this whole space. We are discussing their case, but I think the macro trends have come in to hurt them. And I think there are certain micro issues within the company which has come to hurt them. But it's education, it's children involved. So all those things which were coming, attention which are coming on that, they are getting hyper. It's given. That's why there are so many people who will never get into healthcare or education business in this country. Because this business gets too much, these businesses get too much attention. There's a lot of regulation, a lot of stuff out there, which many people don't want to touch. But BYJU'S has taken it on and BYJU'S has brought it so far. And that's what now they some expertise accumulated, organization learning, which has happened. And if they can accept all these facts, when we are saying 22 billion valuation and the underwriting is just a notional number, Bajaj Finance was, I think, selling at some 9,000 something, or this thing went down to 4,000. Real transactions were happening. Did it really mean that their value is 9,000, but somebody is just saying 4,000? No, the value on that day between buyer and seller was 4,000. So I think in the private markets where transactions may not be happening, but will have to be accepted. Maybe the actual value is below $10 billion today. So it's fine. It's no small number still. So a lot of people who invested, they will lose money, or they will notionally lose money, and from that
Broad
10
message I'm getting from you, Mr. Sahni, this is business as usual. ये तो होते रहता है.
honestly.
ये तो होते
Honestly.
रहता है. Is BYJU'S story और ये तो होते रहता है story. Okay, Ganesh. Is it emblematic of the edtech sector?
No, I don't think it's emblematic of edtech sector, but it is definitely the learnings from there is those valuations that we saw, the euphoria that we saw, the ticket sizes that we saw, the amount of money that we saw, all of that was over exaggerated. All of them have corrected. I don't think in a short while we are going to go back to that. So to that extent, that is learning that exists. And two, the entire ecosystem, right? Not just the founders, entrepreneurs, the board, investors, venture capitalists, all of them have reconciled to the fact that we need to focus on fundamental unit economics, fundamental metrics, and path to profitability, and not just go after growth. But again, see this down round, this valuation fluctuation, we have seen this even in the case of Flipkart. Flipkart went through 1 or 2 down rounds before having a stellar exit by selling to Walmart. Now, the challenge that happens...
But you know what? I just want to say valuation down round is one part of this entire story. They've right now taken their lenders to court.
Yeah, that is something very, very, very
That's
concerning.
The headline. That's the headline.
That is concerning. That also shows Indian startup ecosystem in bad light.
Yeah.
My fear is that when Indian startup further want to access international debt capital, this will come as an example that if we can take a lender to court, if we can renege on the payment and get into litigation, then what is the comfort next startup, Indian unicorn or a large startup, when it accesses international debt capital, what kind of comfort they will have is a matter of some concern. It's almost like the case of Go Air, where we said people, when they go to Indian court, the lessors of people who are leased out the plane cannot access or cannot possess the flight because the aircrafts, because it comes under Indian law. Now, what will happen is it will create. So that is one concern. Two, how is this going to come out of debt trap is another concern, because they have to pay up the debt that is there. All of that are concerns because the cash flows do not exist currently. So those are real serious issues. And because edtech is BYJU'S is the largest and is a bellwether there, anything that happens get in global media attention and reflects the startups poorly. It is not endemic, but it is a talking point. People will talk about it. So to that extent, I do really hope that BYJU'S, they are terrific entrepreneurs and they have done great stuff in the past, are able to come out of it cleanly, settle it with their lenders, and come to an amicable solution than getting into litigation, because that doesn't help anybody.
Right. All right. So this is a story that continues to unfold. Of course, we'll be watching the space. But thank you so much, Harminder Sahni and Ganesh, for joining us today on the show.